Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades. And before I go over the targets that were set last week, I just want to make a quick announcement that tonight from 6 to 7 p.m., we will be doing the rapid fire stock analysis session for our members, where my goal tonight, and this is a stretch goal, but I am planning on going over 60 brand new ticker symbols that are brought to me from the audience, and in rapid fire succession analyze those stocks for our members. Now, if you're interested in that, just go to stickytrades.com. You still have time to register and even have a 15-day trial period on that. Now, a lot of people ask me, what kind of results do you get? Well, here's just a little bit of a sample from what we did last week. Each and every one of our members have the ability to type in ticker symbols. And then I set the targets, again, using the 7-point trading checklist. And you can see here as I quickly scroll down, there's going to be a lot of blue off to the right-hand side. The blue represents the targets that have already hit. Now, you have to understand, this is in 6 calendar days, and we have 59 stocks analyzed, and you can see the majority of these targets have already hit. And, what you're seeing on these midweek reports are just a small sample of my analysis, where I go over the major markets like we're going to do here today. And you can see from past results in these diagonal lines the number of times that these targets do hit. And it's quite amazing to see how often these targets hit. Now, of course, there's always going to be someone in the audience that's going to say, oh, you missed one. Yeah, of course. No one's going to be 100%. But right now, we're tracking 83% hit rate on the thousands of stocks that I've analyzed over the last years here. And we keep track of that through an algorithm that is written by one of our members, Adrian, who's a third-party validator, and he tracks each and every one of our positions. Now, let's get to the market. Today, you could see that we are in the process of coming into the close, and this little body candle is more or less a big nothing burger. What's happened here today is that there is absolutely no bounce from the CPI numbers coming out yesterday. I still see a gap above the market up here that could fill, but you have to understand that once that gap fills, it becomes a resistance area. So for as long as the stock is down below this horizontal line, that's going to be bearish. All right, now I'm not going to put a forecast out just yet. We did hit the downside target from last week. Remember, that's been in place for a little while at 380.46. We hit that yesterday to the penny. Look at the low up in this column up here. 380.46 to the penny hits that. We have a higher low today, but we have a lower high. Volume is light. And remember, tomorrow we have unemployment numbers coming out. We have retail sales coming out. Who knows what's going to happen? And that's one of the reasons why I'm not going to put a forecast till Friday, because it's basically a 50-50 shot up or down based on the information, because the way the markets are trading, we're going from one data point to the next, one CPI to the next unemployment number, which is probably one of the most manipulated numbers out there. So be really careful. If you're using the Jim Rohrbach method for trading, which is something that we've promoted over time, I just want to show you something that if you take the SPY, for instance, and I'll come back to the Qs and IWM. If you look at this on an intraday level, minute by minute, I have this system here set up using up green and down red arrows, but basically signals the Jim Rohrbach moving average crossover method. So let's say, for instance, you sold here, bought here, sold here, bought here. You would have gotten washed out. This is more or less a whipsaw here. But the last trade would have been a long position on that green arrow as it crossed with a bullish engulfing candle on the minute-by-minute chart. And you would have made a profit from this green arrow to that red arrow and then took a new position on this new green arrow, if you follow. So our methods for trading vary depending on your style, depending on your time frame. If you want to sit in front of your computer all day and trade, that's up to you. I certainly don't like to do that. I like to swing trade and have a life. with my family. But we have so many different methods for trading that will fit your personality and your schedule that, there's something for everyone, more or less. So let's go back to IWM. I already talked about DIA. And so I'm going to back out and look at the daily chart. And you can see that we did hit my upside target here from last week at $200.82. It hit that, and then what happened? The CPI numbers came out and got bashed. Now, as I zoom in here, and let me go back to my regular charts so that you're not getting confused with those arrows. If I go in and look at IWM on the daily, you'll see it here. On Monday, we hit that upside target at 282, gap down. Today, we are very close to filling this gap. Today's high is 199.79. The low from here is 199.84. So we still have a little bit of space there before that gap fills. Now remember, if you're following my gap fill rules, 80% of the time gaps fill, but what happens after the gaps fill? Just like we saw back here. The gap filled right there and then reversed. So I'm expecting a reversal after that gap fills. No guarantee, but that's a high probability setup to the downside. Again, we'll have to see how the data comes out tomorrow and how the markets react. But again, target is hit. Have to wait and see what happens with the reversal. If it does pivot lower after that gap fill, then most likely on Friday I'm going back to these lows right around 190 on IWM. So for you option traders out there that are following the super spread trades, we're set up on the downside for longer term put spreads, and that's looking really good there. So looking at Qs, here we go again. Look at that. We had the upside target hit on Monday, almost exactly to the penny. That upside target was 438.87. The high was 439.14. So we went a little bit higher than that target. And then again, same story, gap down. It's trying to fill this gap here. I'm just going to leave the horizontal line as a reference. I'll remove it on Friday. But we have a drop in volume on the way up, negative divergences. We got a mix and match here on the stochastic showing lower, pivot higher on the CCI. So really hard to determine what's going to happen tomorrow. We'll have to see what happens at 8:30 in the pre-market and get a better idea on that. Now, finally, if we look at the SPY and the VIX, because they're, for the most part, they're inversely related, you can see I had a downside target on SPY that hit yesterday. And now we have this little bit of a candle. It's very much like a hanging man with that same gap above the market. Oscillators are mixed. Volume is down. I'm still leaning more to the downside overall in the coming weeks. So be careful if you are long. Make sure you're using good risk management technique and stop loss orders. And that brings us to the VIX. I was even doubting myself as to whether or not this upside target was going to hit at 1548. Well, we certainly did that yesterday and came within pennies of my $18.11 target from up here. So like always, I count on the VIX as being an oscillating index. It doesn't trend, but it does give us some insight as to the level of fear in the market. Now, let me just slow it down a little bit for the VIX. This is a bearish harami, and we do have a gap below the VIX here. See that? So I think that gap will fill, and then we could see a bounce. So I'm going to do this as like a two-part forecast where I think the gap will fill, then we'll start to pivot. Now, once this VIX fills the gap on the downside, that's going to more or less push the SPY up to fill the gap on the upside for SPY. Remember, it's not always, but for the most part, they are inversely related. I'm going to do two quick shout outs to some folks that are looking at SLV again. SLV, I have a target up here at 2101, which I'll look to sell some of my position. We have a full-fledged pivot point, higher low, higher high. That's looking good with a buy signal down here. And remember, a couple of weeks ago, I put the forecast out on Bitcoin. Now, I got to be careful with this one because I put a longer-term forecast on Bitcoin up here around 60,000. And we're already starting to move. This looks to be, on Bitcoin, a possible breakout. Now, that would be pretty amazing because if we get the higher volume at the end of this week to confirm or support the idea of a breakout, we could hit that 60,000 level a lot sooner than I originally imagined. So keep your eye on that for you crypto traders out there, Bitcoin, the crypto related stocks like Mara and BITO, BITI, it's giving you ideas out there. I'm pretty pumped up about what we're doing here at Sticky Trades. I hope you're enjoying every minute of what we do as far as education and webinars. One final announcement, and then I'm going to let you go, is that we are going to be doing live broadcasts on YouTube, on X, and on Facebook at least once a month, not to give you recommendations or anything like that, but just to announce market conditions and things to watch out for with regard to news and other data that might be affecting price actions. So thank you so much for watching. I really appreciate your time and subscribing and comments and all that good stuff. You're really helping us grow the channel. We're approaching 10,000 subscribers since July. That's pretty exciting, and we're going to start to grow exponentially with our marketing campaign as well. So thanks again. I'll talk to you on the next video. So long.